keeping in, very applicable for the whale games, everything is a psyop. So, psyop, psychological operation. It's an old term from military intelligence or just intelligence in general. Psychological operations. So basically, operations that are designed to push selected information to audiences, to people, and to try and influence their emotions, influence their actions, mess with their reasoning, make them question things, and ultimately influence and affect the behavior of them or of a group of people or an organization or a government or a country, whatever it may be. So in crypto, psyops are rooted in exploiting the cognitive biases of average traders. All right? So the flaws that we have in our emotional and psychological makeup, specifically things like recency bias, confirmation bias, pattern recognition, groupthink, herd mentality, all of that is ammo for the whales in the game of psyops. The reason that it's so easy for whales to employ these psyop tactics is that they are immune to groupthink. All right, so when I say that recency bias, confirmation bias, pattern recognition, that they're all cognitive biases that affect everyone, they do. They affect even whales. Whales are subject to confirmation bias, of course they are. But in the context of a market, the most important cognitive bias is that of groupthink and herd mentality. Because that leads to recency bias. Because again, what is recency bias? Recency bias is the tendency to believe that something that happened recently is going to happen again. Very common in crypto. We're seeing it right now as we speak, January 2022. We've had our big run up since the middle of the year, since July. So we had the short squeeze in July at 30k. Flat bottom, like a triple bottom kind of thing. Then we had the exact same thing at 40k. So we went 30k up to 53, then we nuked to 40. We did a triple type of bottom. Then we pumped again. And then we dropped from 69 all the way down. And at 50, I think it was actually at 60, at 50, and at 40, we've had the same thing where these triple bottom type patterns were forming, and everyone was like, oh, look, 50k is the new 40k, which is the new 30k. And the recency bias makes people think that just because that happened was, the last bottom in Bitcoin, that the next bottom is going to look like that. Another very common one. This was not so much recency bias, although it is. No, I'll take that back. It is. Back in May, everyone said this can't be the top because we haven't had a blow-off top. Because in terms of recency, as in a cycle, the last crypto cycle and every crypto cycle has always ended with a blow-off top on Bitcoin. Always. So the recency bias dictated that, well, market can't be over, we haven't had a blow-off top. And I still see people saying that. So, like, the programming runs deep, and you're battling these people. You're battling people who are so stupid that they think that Bitcoin is going to adhere to the rules it did in 2017 when it was a tiny asset relative to what it is now, and there was a fraction of the smart money trading it. So, whales are immune to this groupthink. Because by their very nature, whales are part of a small group and are not influenced by the words of the masses. And it's actually the contrary. The whales create the narrative for the masses to follow. Understand? It's the whales who create the hype. It's whales who created Solana Summer and the Avalanche trend, the most recent couple of trends I can think off the top of my head. It's them who create it because they are the ones who buy it up. Then they announce that they've bought it, which gives it a boost. Then they start shilling it on Twitter. They start engaging with people who are posting all the memes and all the this and that. And it's whales who move the market, right? So, but there's, for every 100,000 retail traders, there's 5 whales, 10 whales. So they can't really fall victim to groupthink because their group is super small. You know, they don't whales don't fraternize with plebs. Whales hang around with other whales, and yes, they might be subject to their own type of groupthink, but it's obviously not a detriment to them in the markets, so it doesn't matter for us. So, again, a couple of good quotes here that explains it very well from how I like to view it. One, again, from The Art of War. Engage people with what they expect. It is what they are able to discern and confirms their projections. It settles them into predictable patterns of response, occupying their minds while you wait for the extraordinary moment, that which they cannot anticipate. So again, in very simple terms, what that means is play to people's biases, confirmation bias specifically. People want to be right. We covered this in a couple of lessons. They want to be right in the market instead of just focusing on making money. So what they want to do is they want to draw up their nice chart and do all their analysis and look at their on-chain and look at their data and say, Bitcoin's going to go to 55k by this date because of this reason. And so then, if you're a whale, you're very in tune with the market. The whales know what the sentiment is. If sentiment in crypto is that we go to 60k, we're at 42k now, and everyone says we go to 60 next. Well, what the smart whale is going to do is, the smart whale is going to feed information that confirms your bias. Settle the people in to a predictable pattern of response, like Sun Tzu says, by giving them what they want to see, which is price moving up. But then, of course, the whale game is to rug before that. That's the extraordinary moment that Sun Tzu speaks of, occupying their minds. This quote is possibly the most perfect encapsulation of trading. This happens all the time in markets. There's numerous examples. I'll just pick one, the most recent. Not the most recent, but the most obvious from this year, which is Bitcoin's first top back at the Coinbase listing in April. Bitcoin broke, and this is super smart because all the way up, all anybody would talk about was 50k. 50k was like this was the big thing. This was the big barrier, psychological barrier, a massive number. Bitcoin had been 10k just a few weeks ago, and suddenly it was at 42, 43, heading up towards 50. Insane. So what happens? Well, it blasts through 50. It doesn't even spend a minute at 50. It goes straight through it. And all the way up. And pumps even further, all the way up to 58, and eventually corrects. But bounces pretty quickly and starts to move up again. So what does that condition people to think? Well, the sentiment at that time was, well, we haven't just broke 50, we've blasted through it. 50 is now support, not resistance. So in people's heads, we've got over the hurdle of 50. Very smart play by the whales. So now what do people expect? Well, people automatically, in the group think, the sentiment changed from 50k to 100k. Because that was the next big round number. And obviously, completely illogical, completely irrational. When you're at 50k, you have to get to 55, 60, 65, 70. And each one of those gets harder because it's a bigger asset, it's a higher market cap, it's harder to move, there's more liquidity. But no, people think we broke 50, next thing 100. Because they're used to Bitcoin from the previous cycles going 5x in 3 weeks. So they just think it's just going to keep going up and up and up and up. And so you've conditioned them. Their confirmation bias is kicked in because we've broken and held 50. They're now in predictable pattern response. What is that predictable pattern response? Buy the dip. Because you've broke 50 and you've held 50, every dip's a good buy until 100. Yeah? Makes sense if you're a smooth brain, but these people are. And it's not even that there's smart people who are doing this. Everyone falls prey to groupthink. Smart people are actually more susceptible to it because they think they're too smart for it. You see this a lot with what's going on in the world at the moment. Some of the smartest people in the world are being the biggest Nazis. So it settles people into this predictable pattern, which is buy the dip, buy the dip, buy the dip. One of the biggest psyops. And then you come in with that extraordinary moment, which is painting the top at 64. No one expects 64. Why 64? That's why. It's exactly why. Because there's a lot of liquidity, because if you're at 64 and you think it's going to go to 100, you're going to buy. And if somebody's going to buy, what does that mean? That means a whale can sell. And the overwhelming majority of whales came in and sold. And it marked the top and down we went. So that's the way you should frame every trade. You should just view it from a perspective of question your bias, like question your projection, your prediction. There's nothing wrong with having a thesis and a trade, a trade idea, but always question yourself. Go back and look at it and say, why do I hold this belief? Has this belief been assigned to me, or is this my own strongly held belief? So, the principles of successful trading are always based on the presumption that people will continue in the future to make the same mistakes that they've made in the past. All right. So for you to be a successful trader, you need to do not forget the past, and do not think that this time is different. Quite the contrary. You need to assume and act as if people will continue in the future to fuck up in the same ways that they made in the past. Now, that doesn't mean that the chart is going to look alike. What you need to look out for are human behaviors and emotions that always come at predictable times. Fear at the bottom, euphoria at the top, and that kind of thing, all right? Perfect quote from General Patton, which is, if everybody is thinking alike, then somebody isn't thinking. All right? You can expand that a little bit for crypto or for the markets and say that, apart from the whales, if everybody's thinking alike, then somebody isn't thinking. So there is actually somebody thinking, but that's how it's exploited. But at the tops, everybody's thinking alike. It's all bullish. It's all euphoric. It's all, well, it can't end now. It has to go higher. At the bottoms, it's all doom. It's all gloom. It's all fear. Everybody thinks it's going to go lower. And at those points, just purely by the emotions involved, you can tell it's a top or a bottom. Now that doesn't people get caught up and say, like, you could call for the bottom. It bounced from 40k, and I bought some at 42, for example. Yesterday, the day before I record this, 10th of January. And it bounced from 40k up to 42. I figured, all right, that's probably a decent bottom. I bought some, and I said something like, it might go lower, but pretty much think the bottom's in. And it went lower the next day, which is today as I record. It went lower. It went all the way below 40. It swept out all the lows, but then it reversed and went higher again. And now it looks like we're going up. So don't allow yourself to become psyops, essentially, by thinking that price needs to move as soon as you buy it or as soon as you sell it. The more general important reason for me in that specific trade was the fear was off the scale, quite literally, as in the fear and greed index was at 10. But not just that, just the toxic sentiment in the market, the super high short open interest from sellers, so everyone was selling into the lows. And just in general, I just felt like I didn't want to buy, so I had to buy. That's, you should not feel like buying when you buy, and most importantly, you should not feel like selling when you sell. That's the hardest one for most people. So when you're in that general area, just counter trade your emotion. If you feel like not buying, you should probably be buying. All right. But if you buy at 42 and it goes to 39, you're not wrong. Everything's a range in crypto. You cannot buy the bottom tick and sell the top tick. You have to be prepared to take some drawdown. And that's why we don't use leverage, or we use very minimal leverage. Because leverage will take you out of a good trade. Leverage will get you in at 42k, but you'll put a stop at 39, and of course it'll sweep the stop at 39, and then it'll go higher. All right, so don't over leverage. Don't be greedy. You will make infinitely more money by having more winning trades and compounding that than you will by trying to chase a big 10-to-1 winner on leverage. So another quote I like is, "We're always best prepared to fight the last war." I think that's a Churchill quote. That one I really like because it explains perfectly a key flaw in human thinking, which is recency bias. And this goes exactly to what I just said about the bottoms, where people think that 30k is like 40k and it's going to be like 50k or 40k again. And they think that we're going to have a triple bottom this time because we had a triple bottom last time. And they think that we're going to have, a good example was the October-November tops in Bitcoin. Everyone thought we were going to have a 3-peak top because we had a 3-peak top in April, where it was, we made an all-time high, we made another all-time high barely, we made another all-time high barely, and then we dropped, so 3 peaks. And this time we made 2 peaks, and then it nuked. Because people got psyops, they got played. They're all waiting for this 3rd peak. But why would you expect 3 peaks just because for the first time in history we had 3 peaks? Before that everyone was waiting for a blow-off top, which never came. And then suddenly, blow-off tops can't even happen on Bitcoin. And I personally don't believe they can happen because of the liquidity and the size of the asset. But honestly, the most unexpected thing right now would be for Bitcoin to do a blow-off top. So it probably